Hello traders, Gary Wagner here just after 12 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, November 16th, 2017, and this is the Daily Report for Gold and Silver. After passing the tax bill, running it through Congress, still has to go through Senate, we did have muted action across the board in the dollar as well as precious metals. Gold closing up nominally, fractionally up 60 cents higher, 1278.30. Silver up 10 cents at 1707, and the dollar marginally higher, up 0.1% at 93.83. We currently have gold trading very muted on the day, up about 80 cents at 1278.50. We are seeing some real distinct parallels as we go into the end of the year from activity that has occurred in recent year-end periods. Now, I'm looking at a weekly chart, and we're looking at the declines that tend to come in at the end of the year, such as in 2014. You can easily see that the market, which was trading around 1440, came down to these pretty dramatic lows just below 1200 before spiking back up. Now, the interesting thing is the high that came in that year was the high of that rally. From there, the market in essence traded lower till about November of 2014, when it bottomed then and then spiked to, again, a yearly high that was achieved because obviously the market was in a defined downtrend. So these rallies would contain the yearly high, and that would, of course, take this market pretty much to lower pricing. And then if we take a look at what happened at the end of 2015, we can see that market prices bottomed and hit the absolute lowest trading price since the market had been to 1900. But once again, we see in 2014 a true pivot or key reversal towards the end of the year. In 2015, it occurs much earlier, and certainly in 2016, that concluded with a whimper and began with a bang as the market then traded and broke the trend of lower highs than the previous high. Because what we have talked about on many occasions is 2016 contained the first year in which the high, this being 2015 here, the high that it hit. However, we had a very, very similar scenario to what we saw in 2014 and 2015, in that the market rallied and then declined towards the end of the year. And then we got that pivot here in about December of last year. And the reason I bring that up is because although historically speaking, there's no guarantees that history will repeat itself, but we have seen gold prices exhibit a pattern in which the price tends to soften as we go into the end of a calendar year, and either at the extreme end of that calendar year or the beginning of the next calendar year, we get a pretty substantial rally. And that's why I brought that up to you today, because it's certainly something that we want to pay close attention to, because we are at a point in time in which we have seen this market rally. Here we got the rally back in October of November. This is 2014 going into 2015. But in 2016, we had our decline all the way towards the end of the year, because there's absolutely no doubt what we are experiencing right now is a very, very tight area of consolidation. And when I look through the charts to see a similar point in which after a defined sell-off, we had an extended rounded bottom or a period of consolidation, the last time we could certainly identify a similar period to that came at the end of 2015, beginning of 2016, when prices really traded sideways for the better part of a month and a half before having one of the more spectacular rallies that took pricing from about 1020, which was the lowest it had been since it hit 1900, and culminated at $1,380. For the record, we are currently flat after taking a loss, having our stop hit earlier this week. However, I had asked any traders that are still long to email me, and there's quite a few of you that actually are. And my advice overall to anyone still with an active trade or open positions, we've got this tight consolidated area. We have real support at 12 665. So my sense is that maintain a stop that covers and goes just below this particular price point on particular clips up where we get nice little rallies. As it hits this upper band of resistance upon any weakness, cover, take a profit. A break through this particular price point on a sustained basis means you'd want to raise your stop up and then look to see what area it would go to. That's for those of you that still have active trades. As I said on the record, we are currently flat, awaiting our next trade signal. Traders, one of the primary topics on today's video report was taking a look historically at what we've seen happen during the year end over the last couple of years. And it's quite evident that we have seen weakness come into the market as we go into the final quarter of a calendar year, where it bottoms out either in December or January most of the time, and then has somewhat of a significant rally. And as I said in my opening letter, this gives us a reason for alarm as well as optimism. Alarm in that we could see more sideways action in gold, and optimism in the fact that, historically speaking, once that concludes, we should see a substantial rally. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.